Hi, everyone. We're going to start in just a couple of minutes as attendees filter in.
I hope all is well. We're here dialing in. I'm dialing in from smoky yet sunny Southern California. Look forward to the conversation.
Yeah, and Stephan, are you still in LA?
Actually, I'm in New York City.
Okay.
And yeah. I'm in New York City. Interestingly, it was only but a week and a half ago, we had the smoke waft over our way as well. So if there's ever a reminder of the climate crisis happening in our face in this very moment, it's we've had some dark ones the last couple of weeks. I've been feeling it too.
I've heard.
Yeah, I keep going back with which background I want to use, whether it's this illustration of fire or the orange sky photo that I had from a few weeks ago.
Oh my gosh. Well,
which is real. I mean, this is not, you know, sometimes people can think this is kind of an image effect, but no, it's not.
Wow.
I think that's a powerful statement.
Okay, maybe I'll leave this.
Yeah.
Yeah. It's crazy.
And as folks continue to, the attendees continue to, we'll give it one more minute. We'll start right at 11:05. But please remind people that that's an actual real background, Marilyn.
Yeah.
Unbelievable.
It's like a scene out of the film Dune, and you know, it shows that art imitates life, life imitates art, but unfortunately.
Right. Particularly with climate, with everything. Okay, wonderful. Good. Well, I will get started so that as participants, you know, come on the line, we're able to jump right into the panelists. We're very excited to have this discussion. I'm Bahiyah Robinson, CEO and founder of VC Include. You know, our mission, and we started this several years ago, but officially in 2018, is to increase diversity in asset management in the alternative space specifically. And that's our vision, but our mission is really to develop infrastructure that supports BIPOC or, you know, Black, Latinx, people of color, Indigenous, and women-led asset managers, and really create a platform for LPs to, and ultimately a vehicle to invest into the best in class managers over time. So I'll probably say this at the end, but if you're an LP interested in looking to add more diverse managers to your platform, to your portfolio, please reach out to us. And we are, you know, we have the pleasure of identifying, sourcing, engaging best in class managers and LPs nationally and actually globally, you know, around really important conversations that sometimes the nuance gets overlooked a bit. And we believe, and I personally believe, that the nuance sometimes gets overlooked because you kind of don't understand, there's lack of understanding of the problem or a lack of understanding about the community that folks are looking to impact or make investments into. And so for us, it's really, really important to highlight the voices of, in this case, Black voices, Black asset managers and asset allocators, because there's so few. And actually, and I've said this, I've kind of tweeted about it a bit, but this series with support from the Hewlett Foundation, so thank you, Marilyn and the team, this series of conversations, you know, I really wanted to do 5 kind of parts of this series on sustainable investing, but you know, unfortunately, and this is also a call, you know, if there's other asset owners of color, particularly Black asset owners that are in the space that we've overlooked, I mean, we'd like to know them because there are very few. And so when you start looking at who are Black LPs, who are Black asset managers in sustainable investing, specifically in impact investing, you know, think about it. What, you know, how many can you count right now? So with that, we'd like to open up and introduce the panel. This is going to be a conversation, and so feel free to add your Q&A. There's a Q&A option, but it's a conversation, so you'll see all of us on screen the whole time, kind of having this discussion with the central question. And we're going to start with really understanding the backgrounds of all of the distinguished panelists. We'll start with Rachel, and then we'll just kind of go across the line and give your kind of 3 to 5 minute, I'll cut you off for you over 5, 5 minutes.
I will need that. Okay. I hope not to need it.
Letting you know. Yes, Rachel, please.
Wonderful. Thank you so much, everyone, for being here. I'm Rachel Robasciotti. I'm the founder and CEO of Adasina Social Capital. We're an investment and financial activism firm. And I just want to tell you a little bit about me. I currently live in San Francisco, but I was born and raised in a very poor and segregated Black community in rural Northern California. Over my lifetime, I have had 3 different family members murdered by the police without repercussion. And given where I grew up, fortunately, I was born with above average intelligence. I graduated from high school when I was 15. I started my own financial firm at 25, and 16 years later, despite my particular career path, I never forgot where I came from. I now run a $150 million investment firm, and broadly speaking, to give you a sense of what it is that we're up to, we are, in financial terms, an investment product company and widely inside of the SRI and ESG universe, but we incubate strategies inside of separately managed accounts, as many product companies do. But we aren't simply creating investment products inside of we aren't simply creating portfolios and investment products. I want to tell you a little bit about what we're really up to. And that is serving as a bridge between public markets and social justice movements. And what's different about our approach in particular is that we work very closely with the communities that we intend to impact, to both build our own investment criteria and then also to expand our impact well beyond the borders of our own portfolios. And we do that through industry campaigns and education. And as the world turns its attention toward racial justice and systemic solutions, I just want to invoke the South African disability rights activists' statement that nothing about us without us is for us. And I just want to bring that here to this moment. We believe that all of our systems are best transformed by those of us who sit outside of traditional power structures because we carry a new perspective. And Adasina specifically was built by a very diverse team of people from non-traditional backgrounds. We're all committed to making large-scale systemic change through investments in public markets. We're Black owned, and both of our portfolio management teams are Black led. Specifically, the offerings that we have come in 2 categories. One is a public equity strategy. That's an all-cap global strategy. We've been running it for about 3 years. It has over 600 positions in the portfolio. We will be launching in the next couple of weeks the Adasina Social Justice Index, which if you are on Bloomberg, will have the ticker symbol Justice. And I hope to have some additional news to share with all of you. I'll put our email sign up link inside of the chat so that we can give you more information as products roll out on that end. We also have a fiscal justice strategy, which is a municipal bond strategy that invests in Black communities across the United States. And it specifically is intended to provide capital to underserved communities and also to do significant bondholder engagement that brings a fiscal justice lens to the investments in these communities, so that we aren't doing things like taxation by citation, so that we're really investing in the education, health, housing, the positive outcomes for these communities specifically. So I'm happy to be here and part of the conversation.
Thank you so much. Under 5 minutes. Beautiful. Thank you. Thank you. We will go over to Stephan to give a brief intro and welcome.
Thank you. Thank you, Bahiyah. And thank you for doing this, by the way. Your work's incredible, and I really appreciate that you've assembled us here to have this conversation. For everyone who's attended, my name is Stephan Nicoleau, Managing Director at FullCycle. By way of personal background, you know, I can go through a long story, but I'm the son of 2 immigrants to this country. My parents immigrated to the United States from Haiti as children. And so I was raised in a household where sensibilities were about hard work, were about equitable and fair access, and we're really about what's possible here in America and what can be possible if you put in the work and really show up. I started my career in finance at the sell-side investment banks that we all know very well. And I realized early on that finance can act as a real lever for change. It can act in one way or in another way. It can go in either direction. So we can either extract and exploit, or we can use these tools to lift people up and to provide access and opportunity where it didn't exist before. And coming to that realization early in my career was the biggest blessing I could have asked for. So I realized that I wanted to work specifically in impact and use the knowledge base that I had developed over time and the experience that I had to fundamentally change the way things go and to use the levers in the most efficacious way as possible that I knew how to do. So, you know, I've come to impact really with a commitment to giving back and really seeing what's possible if we decide collectively to go one direction or another. And throughout the experience as an investor over the next 15 years after working at the sell-side banks, really saw the opportunity to invest in teams and in people, and ultimately now in my current iteration at FullCycle in technologies that will have the most impact for the most number of people in the most effective way possible. So at FullCycle, we're investors in technologies that can meaningfully address the climate crisis. So we have a climate lens through everything, but we fully understand the intricate relationship between climate justice and social justice. We also realize that we have to be committed to investing in communities where the effects of climate change and the effects of what we have built historically are felt the most. We can talk more about that, I'm sure, on this panel and in our discussion. But we have choices to make as investors, and we all have a role to play. And so for us, we're really focused on finding the technologies that are ready for market, working with the teams to build out what that full-scale rollout can be, so that we're looking at not megatons, but gigatons of CO2 and CO2 equivalent abated in our economy as it exists today, but also making a conscious choice about how we build, with whom we build, and ultimately in whose service we are building, right? So this kind of full 360 view of impact is really important. And what it serves is the notion that there is no such thing as climate justice without social justice, right? And it also serves the notion that, you know, we as a society are going to have to make some decisions about what kinds of structures we put in place to go ahead and invest in those teams and to go ahead and build. And then for us and our responsibility, the other things we take into account are who are the teams that we're investing in and why are we investing in those teams? Do they have a body of lived experience that would imply their ability to go out into a community and build? So we really have it's a big undertaking to invest this way, but it is also the right way for us to build forward. And you know, our orientation is to find the sweet spot between the kind of impact we want to have and the kind of financial returns that the market wants to see, so that the rest of the trillions of dollars of capital needed to move the needle on climate change can be motivated into the market. So I'm really excited to be here to look forward to this conversation, and I really appreciate the opportunity to talk with you all today.
Thank you, Stephan. Right at 5 minutes. Doing great. Marilyn, would love for you to join and to share. And, you know, I'm taking the liberty because I'm the moderator, I'm the boss today, but thank you to you and to Hewlett for supporting the series, you know, being the quiet one, but that, you know, quiet but powerful in this space, in our space. Really appreciate you. So I wanted to highlight you for all the attendees.
Thank you. Appreciate it. And for the benefit of the audience, this background is not fake. It's not a photoshopped in any way. This is a real image from the Bay Area, the Hewlett Foundation, and that orange sky is a result of the air pollution evolved around the wildfires, which are exacerbated, of course, by climate change. So it's all connected, and I just wanted to highlight that for you. So my story is a little different, but because Stephan called out Haiti, I have to call out Jamaica and bring up the Caribbean here. So I have 3 nationalities, the United States, Jamaica, and France, and view the world through those lenses, but also of those places that I have been to. And I only spent a few days. I think I've had a lot of experiences that have impacted me throughout my tenure that go way beyond just what we find in our bios, right? And things of that nature. I studied civil and environmental engineering, and I was actually studying when Katrina happened. And I remember studying the, how we create dams and how we deal with 100-year floods and how we design for that. And then that happened. And I said, well, I'm a freshman studying this, and I know that there was a problem already in New Orleans. How come we didn't do anything about it? If a average engineering student could know, how come no one did anything about it to prevent this? And so I think those experiences have had an impact on my trajectory. After finishing my engineering degree, my first job was in Madagascar with the United Nations on water resources. And I quickly learned about energy challenges. So I kind of shifted focus to energy from there. And when I was working in France in the nuclear energy cycle, I eventually made my way to corporate R&D, and we were working on acquiring a number of technologies in low carbon energy. So offshore wind, concentrated solar power. We didn't have an official corporate venture capital arm, but we were essentially doing that. We were really building up to be this low carbon energy technology powerhouse. And that's where I discovered the challenge of finance and the power of finance. And so I shifted gears from there and really started focusing on finance investments, did some cross-border M&A work out of China. And then when I returned to the States, I joined a firm called Village Capital to lead their clean tech practice. And that's where I really started to focus a lot on domestic issues as well, and how we can use capital to solve our pressing challenges, including in mobility, transportation, across the various sectors that are so important to the real economy and to people. So I joined the Hewlett Foundation in January 2018 to lead our climate and clean energy finance portfolio, which is all about mobilizing capital to solve climate change across 3 economies: China, the United States, and the European Union. And so my role is quite diverse. I have this interesting clean slate to do all kinds of interesting and powerful and impactful ways of funding and allocating capital to solve this existential threat. And so I'm working across venture capital. We are putting money into venture capital funds that are solving the climate crisis, that are investing in companies whose solutions will mitigate gigatons of carbon at scale annually. We're also focusing on asset management, broader asset management, pension funds, insurance companies, and mutual funds, especially the passive asset management issue, which we can get into later. And then banks, through the lending and credit capabilities, we have helped to capitalize, for example, the Clean Energy Federal Credit Union, and enabling other credit unions to do this kind of lending. So I'll pause there and just say that I'm super happy to be here and that you're coordinating all of this.
Thank you so much, Marilyn. Last but not least, Taj Eldridge, Dr. Eldridge, would love to have you share your story.
Absolutely. I think we're going to go 3 for 3 on the Caribbean side, but Stephan, I'm from the other part of the island, Dominican Republic. I think, like Marilyn, there's an intersectionality in my being. My father's from and family's from North Africa, so hence the Arabic name. My mother's family from Dominican Republic, and I grew up in another country called Texas, I always used to say. But I think that, when we're talking about just the trajectory, I currently serve as a senior director for investments at LACI, which is the Los Angeles Clean Tech Incubator. And so I'm loving the conversation we're having about climate justice, environmental justice as well. We're a nonprofit incubator in Los Angeles, focusing on clean tech. And actually, ironically, today is our demo day, where we're talking with a number of companies that are trying to solve the issues that you see behind Marilyn's picture, because it is real. My pathway to this was I think, a little bit different. I think Marilyn and Stephan can attest, as a son of immigrants, you have 2 choices: to be a doctor or a doctor. But when I when I decided to go to college, I wanted to be a singer, a songwriter, and a major. And I figured poetry and literature would be great. My parents weren't happy, but I majored in literature. And needless to say, I did not become a singer or songwriter, but what I did learn was the act and the value of storytelling. Storytelling envelops our belief in religion, our belief in country, our belief in family, but it also envelops our belief in how we make investments. I have a friend that says often that every investment we make has an impact. Impact is positive or negative. So in essence, everything is impact investing. And so for me, I think that, the things that kind of come about that has been really interesting. So after college, I ended up working at Wells Fargo, was in corporate banking, transitioned there to UBS, worked there for a bit here in Beverly Hills in Los Angeles, and then worked in private equity while I was getting my degrees in economics from Pepperdine and Claremont. And it was there I started seeing the emphasis of how ownership impacts wealth. Before, we would have this fallacy that education is what's needed to advance in this country. And that's true in some cases. But we see often in data, and I really just tweeted this as well, that amongst all of the educational portions of it, whether you have a high school degree, a bachelor's degree, master's, or even doctorate, there's still a wealth gap. And so what's missing? What's missing is ownership. And so at that point, when I realized that early on, and I think we always talk about we can't be what we can't see, and the person that helped me see that, and when I was younger, was a guy by the name of Reginald F. Lewis, who was one of the first Black billionaires who really taught and really showed me about ownership. And so after being at the private equity firm, I got into venture capital by being first an advisor to a number of companies and then being an operator, and was lucky and blessed enough to have some companies that were exited and then started investing on my own. And it was there that we really start seeing the efficacy of ownership, especially for minority communities and what that meant. But I think also too, when we talk about ownership, we have to realize that there's a responsibility with that, to ensure that when the door is open for you, you keep the door open for other people. And I think historically, that hasn't been the case, where we fight so long to kind of have it. And then after that whole scenario of really being an investor, angel investor, and working with companies, I was tapped to lead the accelerator at the University of California, where I met, kind of talked to Bahiyah from dealing with that. And I selected Riverside out of all of the 10 UCs. And the reason I did that is because of Riverside has one of the largest amounts of diverse individuals that are there. And my thinking is that if you wanted to really kind of focus on, commercialization of technology and really have a diverse angle towards it, why don't you go where diverse people are at to begin with? And so I led that incubator for a number of years here in Riverside, California. That's about an hour or so outside of LA. Most people know Riverside from Coachella. But about 2 years ago, I ended up moving towards LACI. And there, what I love about LACI and I love what we do is that we learned early on that climate change, number one, is definitely real, but also climate change impacts minority communities at an advanced rate. And so we have to also really have conversations with those communities and really kind of do it. One of the things I used to think about all the time is that when I thought about environmentalism and I think about people in this space, they will always talk about saving the world and saving animals. And I would think about, what about saving myself? What about saving people next to me? So we kind of talk about environmental justice and climate change from a different standpoint, because there are diseases like eczema, heart disease, lung disease that are exacerbated by climate change. And so those are the ways that we talk about it and the ways that we want to impact it and the ways that we see it. So hopefully, in this discussion, we'll dive into it more. But Bahiyah, thank you so much for giving us the opportunity to have this great conversation about this.
Pleasure. So, I wanted the audience to get a sense of your individual backgrounds and your journeys, because like you said, Taj, this is about, storytelling, and also it's about kind of building trust, right? We all know as investors that, you build trust by getting to know people. And so in this COVID environment where we can't be convened together, because we've done VC included has done 18 or so dinners and different events nationally. We can't do that, unfortunately, but we can convene this way. The story, the background is really important to start to build a relationship. I think the other thing, we had I have one question that I'd like everyone to unpack in your own way, because this absolutely is about intersectionality. As you see, each panelist is coming from a different perspective. So diversity of thought within diversity in diverse communities. It's like all these layers. But there's this debate. I mean, as CEO of VC Include, that kind of, you know, works with fund managers and has this platform of diverse and women-led managers, but also works with LPs across asset class, from a single multifamily office to, you know, pension. There's a lot of tension around the nomenclature of impact investment, ESG, kind of as a lens in a way. I mean, governance lens, but a lens nonetheless, not necessarily a specific asset class. You know, some would argue impact investment isn't either. Some would say it is. And then sustainable investing. So I get a lot of kind of questions like, we don't do impact investing, we do sustainable investing. I'm like, okay. Or we're, you know, interested in ESG. And I'm like, oh, so you're impact investor. No, we're not an impact investor. So for me, again, you know, I kind of have to, you know, translate, right? A lot of times where I sometimes joke that ESG is like the institutional investors' way of saying impact investing, because they won't say impact. So how does this debate, so, you know, so there's this debate among LPs, or at least among kind of the investor class, if you will, and where most of us are part of that, even the attendees. How does that debate, though, negatively impact communities of color? Because we can talk about the nomenclature, but then we also have to talk about the actual impact, right? Not as a word, but like what is happening on the ground. And how do you guys kind of think and work through and invest? You can take any or all of those questions, you know, into the space in a way that makes sense to you. And then how do you label it? And just feel free to just jump in.
Sure. Oh, go ahead, Marilyn.
No, go ahead, Rachel. You go first.
My sense is that this desire to delineate and separate out actually impacts us in our work in a very particular way. All of our work is moving more toward wholeness. So intersectionality is just about like, yes, let's bring all of the issues to the table. And underlying a lot of those questions is really this, concern about returns, which I also think has not been whole. We've been talking about returns as though the only part of them we care about are the financial returns that go to a particular organization or individual, rather than talking about true return that we all actually experience every day. If I'm doing really well, but my best friend is eating cat food in retirement, like I'm not actually doing well. That impacts me financially, emotionally, et cetera. And for some reason, we've all, I think maybe Milton Friedman may be responsible for this. We've all agreed that no, it's just the personal financial return that we care about. That encompasses all of return. And that's just as short-term and short-sighted as it is to just talk about our issues of racial and climate justice in a siloed way. So all of our work is really moving toward wholeness, moving toward inclusivity.
Yeah, I mean, I would add, I look forward to the day, and I hope that day is coming, where there's no such thing as impact investing. It's just investing, right? What makes a good investment is way more inclusive than just shareholder or investor value that's delivered by virtue of sheer profits. And we have to consider now stakeholder primacy as opposed to Milton Friedman's shareholder primacy. And I wanted to pull this up and just read something to the audience, because I think we talk about shareholder primacy. I think we forget just how directive it was at ignoring all of the impact of everything else that needs to be considered when we operate and when we invest. So it says, this is directly from Milton Friedman's original letter. It says, corporations should not go beyond the letter of the law to combat discrimination or reduce pollution or maintain community institutions. Corporations have no social responsibility except the sacred responsibility to make money. That could not be farther from where we need to be in order to solve the big challenges ahead of us that are today and ahead of us. And for me, it cements this idea that we are in a transitionary moment, but we have to be the agents of that transition, right? It's not just going to happen. We as investors have to say, okay, for this team, for this kind of operation, for this kind of infrastructure that we are investing in and building, we are going to consider the diversity and inclusion on the team. We're going to consider the lived experience of the people that are not just your customers, but your stakeholders, the community in which you are building and operating. How are you serving that community and giving back? And what's your lens on the issues of the day that pertain to social justice and climate justice? Are you asking these questions? We're asking them as investors, as private equity, growth equity investors into teams and companies. And we also charge them to ask that of their customer base and of their stakeholders as well. And so I'm heartened and encouraged that we have the opportunity to lead this transition, but it's important to know where we came from. We've had 70, 80 years of shareholder primacy, and look where it's gotten us, right? So now this transition needs to be about encompassing the entirety of stakeholders and seeing and really reimagining where that can take us for the low carbon economy of the future, and really start to ask a question that's very specific about in whose service are we investing and building. And I think that's the most important kind of transition we can think of, because 100 corporations, for instance, cause 70% of the CO2 and CO2e emissions globally. That's staggering. And if you're a public markets investor, you've got to consider that when you're making your investment decisions. And if you're a private markets investor, you've got to consider the managers that you're backing and the operations you're backing and the full effect that they have by virtue of the capital that you've put into them.
Yeah, absolutely. I think, Stephan, one of the things that you said that was really interesting is about the impact for the communities. One of the things I hear often, and I always think about, is that as we think about impact investing, is that we think about social responsibility in our dollars. How much are those communities being involved in those decisions? How much are those communities being communicated to? Painting a picture, what I look at that is similar to what, and number one, as an economist, I'm loving the shout out to some of these economists, but I'm gonna add another to the mix, Dambisa Moyo, who talks about debt aid in Africa. One of the things he really kind of talks about is he tells a story about there was this organization providing computers to this village in North Africa, not realizing that this village never even had electricity. So these computers were not needed, and they felt good about the impact they were providing with these products to this village, but there was a disconnect between what the village needed and what they could provide. So I think even as investors, we have to always think about that as well. I see, we could have this conversation about what the world looks like post Joyce Floyd and our industry and a lot of capital that's going towards these different areas. But my question is that are these allocators outside of us, are they talking to us as other allocators of color to figure out what's needed, to figure out where the dollars can be really, really impactful? And I think that that's one of the conversations that needs to be had as well, is that the communities need to be engaged, the people who are being impacted need to be engaged. When we look at things like even in clean tech, and I would pray for the day where we can't call it clean tech, where every investment we make is clean just to begin with, is energy investment or transportation investment and so forth and so on. But we even see that when we had the micromobilities on the scooters, they were typically in a more wealthy or affluent parts of town, when other parts of town could really use their micromobility to get certain places. And those technologies need to be really augmented to fit those communities and their needs. Something as simple as adding a basket to a scooter can change the trajectory of how the scooters received in certain communities. But people have to be from those communities to even tell those founders, tell those investors that that's a need. So I think that that's one of the things that are missing a lot of these conversations, is getting people who may not have that. And I think for me, that's one of the reasons why I always liked the fact that when I was in grad school or when I was in my doctorate program, not being a person that just had a financial trajectory, a person who had a community trajectory, a storytelling trajectory. And I think when we talk about diversity, we have to also think about not just race or gender, but intellectual and experiential diversity as well.
I echo everything that has been said. And something tells me that if this panel were in a room somewhere to decide what the nomenclature should be, we would have never chosen those terminologies, right? We would have never said ESG or impact investing or even sustainable. We probably would have just said, this is good investing, bad investing. This is just a good investment, period, versus bad. And so part of the issue, I think, at the root of this is that we were not in those rooms at those times, right? And that's why it's important that we are there now. All investing has impacts, right? There is no such thing as neutral investing, neutral money. I mean, we understand at a basic level when we go to buy, let's say, an apple, we know that it can be organic. It can be as climate optimized as possible in terms of transportation. We know those things. The same thing for our money, right? Whether it's in our retirement, our bank accounts, institutional or retail levels, none of it is neutral. And so I do agree that some of the terminology has siloed the industries and created marketplaces that are becoming mainstream today. But ultimately, we're talking about good investing when we talk about ESG friendly, climate friendly, impact, what have you. What has arisen though is this hodgepodge of actors where they have not been diverse coming up with this terminology. And that's why we are where we are today.
Bahiyah, I want to ask a question, which is, what does everyone feel like gets in the way? Like, why have, just to what Marilyn said. And Bahiyah, you can also redirect.
I'm open to answers to that. I have an answer as well.
I think it's a great question, Rachel. I think one of the things, and Bahiyah and I talk about this often, I think gets in the way of what Marilyn said, and his whole conversation is about ownership and who has ownership. And I think who has ownership really kind of determines what's important. When you look at funds and the way that funds make an investment, and even if you have a person of color, BPI's OC at the helm of that, what really leads to that are the LPs and what they desire and what they're looking at. And I think that's one of the things we've been trying to see. When we talk about the racial wealth gap and we talk about this ownership piece of that, there's a quote by Connie Raza that's really interesting that talks about wealth is how history shows up in our wallet. And so I think that there's an opportunity and a need for us to change the trajectory of history, because right now we're in history right now, and the things that all of us are doing right now, the things that the panel, the people who are attending are doing right now will be history in the future for my kids, other people's kids, and what have you. And so we need to really kind of figure that out and understand and recognize our actions right now will have impacts in later that we have to figure out.
Yeah, I think that's an important one. I think ownership is a really important point to hit on here. I think Rachel, to your question, there are two notions that I think are really important to dispel. The first is that if you are investing sustainably or if you are investing in impact, there's somehow a concession on your financial returns. Like, we should say unequivocally here, especially for this audience, that's not the case, right? That's been proven again and again, that not only to be a false notion, but one that's a real challenge for this industry to shake as a reputation and as a kind of label in order to go out and really scale. So we should dispel it here, right? Impact managers like FullCycle and others are market rate or better, in addition to the social environmental impact that we have by operating. Then I think the other is specifically around what's been coined, to your point, Marilyn, of the not being in the room when terminology is made, but emerging managers, right? We, emerging managers, actually outperform the market. That too should be something that we explicitly say, so that we understand that as an investor, as an LP, as an allocator at the other end of the value chain, the choices you make about financial performance can be aligned to the choices you make around the impact you want to have in the world by virtue of putting those dollars to work, right? And so those are two things that act as challenges, but couldn't be farther from the truth. And for investors in this space to think about across asset classes what they're doing, to understand that the problems that we face, specifically the climate emergency, it's going to impact every asset class. So you better be considering it, whether you're investing in private equity, listed equities, in infrastructure, or in venture, right? Or in real estate. Like, all of these asset classes are going to feel the effect of this long emergency. And from a constituency point of view, so all the way down to the other end of the value chain, the effects of the climate crisis unabated will disproportionately affect Black and Brown communities around the world, specifically in the United States.
Yeah.
Right. So these things we need to understand as kind of a base layer of understanding, so we can then build upon what it is that we choose to do as investors and as a society.
And just to jump in again with the kind of 30,000 foot view, I think where LPs, particularly ones that have been, in their roles, either as institutional allocators, there's a challenge. You have to share this is the evolution. And so what happened 20 or 30 years ago is not what's happening now. I mean, obviously, you say that and you're like, duh, but sometimes there's a mind, the changing hearts and minds, the kind of the 30% shift of perspective is really important here, because, what happened is, yes, 30 years ago, emerging manager programs failed because they didn't use the word diversity, who they were intended for, kind of got usurped. There were some losses, there were some bad actors. Things happen, right? So that happens. It's not a complete falsity that just like in any investment, some things went wrong because of externalities that were, unforeseen. But it has evolved. So investing in China, for instance, the first movers into China, they didn't do well. The first emerging managers, things got screwy. Underrepresented fund managers actually are the class of, or the types of managers that have actually outperformed, partially because they've gotten, fought tooth and nail to kind of get there and to be good fiduciaries and good managers of capital. And it's like through the eye of a needle. I think now, so that was like pre-COVID. So those are the conversations we were having kind of up till, let's just say, February. And now you have this cauldron, literally and figuratively. I'm here in San Francisco. It's happening again, starting to heat up. The index is going up. It was at 300 a couple of weeks ago. It's like creeping back up, right? So again, this is real, and it's now, there is a kind of a mandate for us to evolve more rapidly into solution sets that not only solve for kind of the returns profiles, which, to Stephan's point, all of these sectors are outperforming. ESG as a lens outperforming, plenty of data. Diverse managers outperforming, women-led funds outperforming. This is an opportunity set. This is not charity or concessions or catalytic or anything like that. But it's also about making sure that the plan, the strategy for LP capital investments going forth has enough space for the new, for the next, for how we can create these solutions and invest in them for the next 10, 20, 30 years, because we can't keep telling the story of 20 or 30 years prior, if that makes sense. So that's kind of the full, it's like where we were, where we are now, or just in this last 12-month period, how that's changed and how it's critical for the next, 12 to 24 months to invest and double down on solutions where managers are owners, they're, communities of color across the board, women-led funds that own the solutions, that are identifying whether it's women-led founders or just the best investments across the board. We have, managers that are specific to gender or race. We have others that are specific to an industry, and just know that they're great portfolio companies that happen to be run by people of color, but all the way down to the company level and the community level, right? Because companies impact communities. You have to kind of look at that full supply chain and value chain in ways that I think, we weren't tasked to doing that as an investment community. And so, we're here to help that. And that's why we have such brilliant minds on this panel and others that are really speaking to what's happening on the ground and why it's important. Marilyn, do you have a comment there? And we have some questions too, so I'll pull one or two of those up.
And I'd love to answer the question of what gets in the way after Marilyn.
No,
Sure.
go for it. I'll take on some of the questions.
Great, go, jump in.
So there's been a tectonic shift here where suddenly there's conversations around systems and how those systems require institutional level responses. And so I'm still seeing from a lot of investment committees and CIOs, you know, the level of interest has gone up considerably in what we're doing, and we are still finding ourselves tangled in the same outdated web of due diligence that was designed for a system in which there were many providers and not very many folks who were kind of like seeking what the providers had to offer. That's kind of what an applicant and RFP process is made for, where in reality, there's relatively few of us doing this specific work, and we're still being subjected to those extensive RFP and RFI processes that have structural inequities built into them, like GIPS compliant returns specifically, the asset under management requirement being a certain, at a certain level, track record, the number of years that you've been doing this particular work, also fees. And for a number of reasons, being a truly regenerative firm means that like my fees aren't going to be the lowest because I refuse to extract from my employees. And I may not have a track record because part of what we're doing is building to meet this moment. So if we really need systemic change, then that means the actual systems within the institutions at the most conservative locations, that is with the CIOs, the CFOs, the investment committees, even within these vastly liberal organizations, has got to shift the burden of due diligence actually back onto the institution, because there are quite honestly far more institutions looking for what we have to offer than there are providers. And so that just means that this kind of application process has to switch. And I've recently just had to walk away from extensive due diligence processes, not because what we have to offer is in any way inferior. It's just because I have so many more people wanting to talk to me who are willing to take on the burden of evaluating whether or not we are a good fit themselves.
Great point.
Yeah, it's a really good point. I would just add, you know, that's a responsibility for every trustee, every CIO. You know, you are a fiduciary. That means you are a steward of capital. You are entrusted to invest wisely. And in this market, today's environment, with all of the crises we have layered on top of each other, that means investing perhaps in a different way. Business as usual will not get us through a climate crisis, will not get us through a COVID crisis, will not get us through a financial crisis, will not get us through social unrest, right? So we have to think differently and maybe partner differently when we put dollars to work into the market. And as investors, we have that obligation to do that. And I think that's a really important point that you make, Rachel.
Yeah, absolutely. And to realize, I think that investing in diversity is not about charity, it's not a moralistic issue, it's an economic issue. Data has showed us, and we've seen it time and time again, and I think Stephan and others have mentioned about the impact and the effects of diverse fund managers and the returns on that end. Even from a standpoint, we look at data that even just reducing a lot of the wealth gap that we have and really kind of focusing on equalizing a lot of the capital, how do we impact our GDP, and thus what everybody loves, impacting their bottom line and their own personal impacts, 401ks and retirements as well. So those are some of the things we need to look at and really pay attention to also.
I want to add in terms of a trend that what we're seeing on the manager side, again, there are always 30,000 we've worked with, we've talked about 100, and we have a platform of about 125 managers. We have worked directly with about 30. So it's, how do I say this? It has changed for the managers themselves with this kind of push around, and especially in the last 2 or 3 years, around ESG impact and sustainability, because a lot of those managers, particularly the ones with the track record, so now we're talking about fund 2s and fund 3s, maybe not first time managers, you know, have been trained, have also been, have had a track record in traditional investing, right? That doesn't have those screens, that doesn't have those kind of mandates around, you know, positive social, economic, environmental impact. And so, you know, they feel sometimes uncomfortable with, okay, there's an LP that wants to invest in us as a diverse manager, but we don't have an ESG or impact strategy yet. Like, we would like to implement that, right? It's something that, you know, from the VC Include perspective, we're absolutely working with managers to advise on ESG strategies, both at the manager level and at the company level. But it takes time. It takes, you know, it takes a bit of a shift. And so for certain managers, again, fund 2s and 3s that have this track record along a specific type of investment, you know, they want to shift, but they're afraid that, well, then you're going to ask me for a track record in that type of investment, right? And then it's like, does that erase what we've already been doing as like, you know, good investors in the strategy that we've, you know, had the top, you know, quartile performance in the last 2 funds, but now we want to make sure. And so again, kind of part of our work in the, as the advocates and as the support is to, you know, soften that transition a bit and be able to translate for LPs. Look, you know, they're great investors, full stop. This ESG and impact kind of piece is important, right, for our world, for the, you know, for planet and for people, planet and people. But we need to be able to Rachel's point, to everyone's point, kind of think differently about that track record and about that expertise, and be able to see that it will carry along an expanded and integrative and holistic viewpoint of investing going forward. So it's that too, in terms of, again, a little bit of a shift on the LP side and doing due diligence, that, you know, if managers are saying they want to add these layers, these ESG and impact, social and positive social impact, that's a good thing, right? That's not a hindrance. That's actually a value add. Yeah, so if you have coal in your public equities portfolio today, you're just a bad investor. I mean, it's just, and it's likely if you are hitting those numbers, those returns, you probably didn't have coal for a long time. You probably don't have the oil and gas industry that's been tanking for decades, at least at a high percentage. You know, so it's very likely that if you are doing well, you're also already doing good. And so there's kind of a narrative shift that needs to happen there. And then I think, you know, one of the indications that I've had in the past few months that systems are beginning to change. One example of that is with UBS and their whole wealth management department just announcing by default, their recommendations are ESG for, you know, just under 3 trillion by default. So there is no traditional investing for them. It's all ESG. And if you really want the bad stuff, I guess we could give it to you, but you're probably going to have lower returns and all of these other things. But by default, it's ESG. And so I think there has to be that narrative shift, which aligns being a good fiduciary, a good investor with ESG. There's really no separation. Yeah. And I would just, yes, that is also a supporter. So we're excited for that. We love UBS. I would also add, you know, I look at this specifically from a climate lens, but I think what I'm about to say applies in many different dimensions, which is understanding the nuance. And this is for us as managers as well, understanding the nuance between doing less harm and doing ordered and prioritized good, right? So from a climate lens, we are out of time to do less harm, right? Like investing in fewer oil and gas companies, investing in less coal operations isn't going to cut it. So this is about a transition moment. And so moving the needle towards doing ordered and prioritized good means we managers have to have not only a theory of change, what are we emerging into? What's the world we are emerging into that we want to build, that we deserve to live into? And how do we quantify the impact that we have by virtue of being the managers that we are, right? And so getting really specific, there was a question here that said, you know, what are we never asked that we should be asked? What LPs should be asking is, what is your theory of change? You talk about impact, you talk about the kind of impact you want to have. Show me the data that underpins your theory of change of what you invest in and why, right? And then for us managers, we have to be able to develop that to say, okay, we want to build and live into a world where we don't have climate emergencies raging on both coasts at the same time. We want to emerge and live into a world where social justice and equal treatment under the law is the societal framework that we operate in, so that we can go out and do the work that needs to be done, right? So that's the other connection, is that if we're not talking about social justice, then the folks who are here, who are doing the work, are fundamentally disadvantaged from doing really important work that needs to get done. And so drawing the through line there is really important. And I think for we managers to have an understanding of doing more good that's prioritized and ordered, and stepping away from kind of nebulous doing less harm,
will serve us in both our performance and also in living into and creating that world that we reimagine as managers and as investors.
Yeah, absolutely, absolutely, and I think that for fund managers, even for our own, and how we kind of put some things like that into reaction and reality. I think Franklin asked a question about how has the background impacted the way that we make investments. So at LACI, with our impact fund, we thought long and hard about, even though we're an environmental clean tech fund, we looked at ESG as missing a letter, and that's D for diversity, because I think that sometimes we kind of take social impact and make it very broad and have to be very intentional. There are intentional actions that got us here, and we need to have intentional actions to get us out of this point. So as an example, when we make investments to companies, we not only look at the traditional ways as fund managers, the way we make investments, but we have 3 different lenses. An environmental impact lens, we want to know about that. And of course, with them being affiliated with LACI and a clean tech incubator, they're going to have that. But then secondarily, we look at an economic lens, and we want to talk about not only services that are being deployed in other communities, but also too, jobs that are being created there as well. And then thirdly, one of the things we look at is social impact. Do you have a woman or underrepresented person of color on the C-suite, senior leadership board? So those are the 3 frameworks that we kind of utilize to make those investments. And I think that's one of the ways that we try to take that idea to heart. And again, we wouldn't have never been able to do that without the support and the desire of our own LP to allow us to have that freedom to make that framework.
Thank you, Taj. You know, we're running out of time. I wanted to thank all of the panelists. Always goes too fast. You know, feel free to reach out to them, and obviously being VC include servicing both GP side in terms of technical assistance, advisory, and support, as well as LPs that are looking to invest in more diverse managers that are solving a lot of these problems and building a new model for sustainable investing. Please reach out to me and to our team to learn more and to work with us. And we will have a wonderful week. And thank you guys again for attending.
Is there a way for the Q&A? A lot of questions were answered inside of the Q&A box. Wondering if there's a way to send that out to folks too. Maybe we can, if it's possible.
Charlotte, are we able to send out the Q&A? Is that possible?
I'll look into it, yeah.
Okay, I'll make a screenshot as well. And we can follow up that way. Okay,
hey, thank you
everyone. Have a
wonderful
wonderful
day for doing this.
All right, take care.
Great, thank you.
Thank you.
Bye.